All right, so many of you have been asking me this question. Basically, the question is this: if I'm given the option to be treated as an employee or an independent contractor, how much would I pay in taxes in each situation? So this might be IT consultant that is an employee right now and can be an independent contractor. This could be a physician. This could be a few different people, an Uber driver even, employee versus independent contractor, okay? So in this video, that's exactly what I'm doing, is comparing the employee versus independent contractor taxes. So you can make a decision of like, how much more do I need to ask for, because I want to see which is the best tax situation for myself, right? So let's kind of take a look at this over here and see what I created for you. Basically, the assumptions are this. You are an employee right now, you make $120,000, all right? I know some of you are not making that much, but the IT field, this is on a range I felt comfortable with saying. So $120,000, all right? So you are an employee earning this amount of money. How much taxes do you pay? And then if you go the independent contractor route, well, what you're gonna pay as a sole proprietor being taxed that way, or if you take it a step further and you decide to form an LLC, be taxed as an S corporation, what taxes are you going to pay in this scenario? So let me walk you through this a little bit so you can understand what's going on here. All right, so let's just call this person John, okay? John working for someone else, earning a W-2 wage. If John earns $120,000, then John has to pay his share of Social Security tax. So $120,000 times 6.2%. That's how much he has to pay in Social Security. In Medicare, he has to pay 120 times 1.45 equals 1740. All right. So the total Social Security and Medicare taxes is $9,180. Now I put this in my tax software to see, how much income tax John would have to pay. And the number I got is about $26,000. The assumption being made here is that John is married and his spouse earns $60,000, right? It's just a number that I just threw in there, okay? So that's how we got to this number, that married filing jointly tax return, spouse earns 60 grand as well, as John earning 120. So this was the tax liability. Total tax paid, 35,129. Now, if John decides to go the independent contractor route, or his employer says, hey, we can't afford you as an employee anymore, you're now an independent contractor, what taxes does John have to pay? Well, if he's going to be taxed as a sole proprietorship, he excuse me, he now has to pay both sides of this tax. So he is now the employer and employee. And there are some tax breaks for that scenario. So just trust me when I say the math is $16,955. So $120,000, the way you could do the simple math, times 15.3% is about how much you would have to pay. But because of those additional tax breaks, the number is more like 17,000. Okay, so the 120 times 15.3 doesn't exactly add up to this amount. I included the tax breaks here. How much income tax does John and his spouse have to pay? 19,000 and change. So the total tax, 36,132. So if the employer is going to now call you an independent contractor and pay you the same amount of money, you're in the hole, okay? You're paying about $1,000 more in taxes in this situation, all right? Now, if you sort of wise up or you watch my YouTube channel and you learn that, hey, if you're a sole proprietor, you should probably form an LLC, have that LLC taxed as an S corporation. This is the scenario that might kind of play out. Your $120,000, okay, that's the sum of these two numbers here, is probably going to be split. It's probably going to split in between you being an employee and earning a reasonable compensation of 50 grand and taking a distribution of $70,000, right? The total of these items is $120,000. What taxes do you pay? Well, your S corporation is going to pay its share of Social Security and Medicare tax. So the 50,000 times the 6.2 and times the 1.5 equal these numbers here, 3,107.25. And you as the employee also have to pay your share on the 50 grand. So you pay the same amount, all right? How much tax do you pay? Again, this is you and your spouse. How much do you pay in income tax? Well, you'd be paying $22,869 in total income tax, okay? And so your total tax between both of these numbers here is $30,519. Now, something that I'm just going to quickly say is that, under both this option, the sole proprietor and as an S corporation, you would get some tax deductions, right? You could probably deduct home office, a little bit of your cell phone, home internet, maybe mileage, but you might not be driving around too much in this scenario. But those would be some additional deductions that you get. So in these kind of scenarios, I'm saying after those additional tax deductions that you can get, maybe a laptop that you purchase and you deduct that your profit in the business was 120 to keep things even with how much you were earning as an employee somewhere else. Okay, that's kind of just an assumption that I'm making here. So how much tax did you pay as an S corp? $30,519. So comparing that from an employee to as an S corp, you might think to yourself, okay, this sounds like a great deal. I'm gonna save $4,600 in taxes, right? Well, not really, because the S corporation has some fees associated with it, right? You might have to pay a CPA, around $900 to file that S corp tax return. You might enroll in a payroll provider to help you facilitate paying yourself this $50,000 because there are payroll reports at the Fed and state level that you need to file on a quarterly basis and pay those taxes on a quarterly basis. And you need to, pay the maintenance cost of your LLC. I'm just rounding up. Some of you are going to pay $50 to $100 a year. Some of you are going to pay $800 a year if you're in California. So, I just kind of said $250 a year. So your total fees are $1,749. So your net tax savings is $2,800. So you still might be thinking, okay, this is a great deal. I'm going to save roughly $3,000 in tax. But let's look at some considerations here, right? Your reasonable compensation of $50,000, that might be too low. You might have to pay yourself a little bit more than that to stay out of trouble in the eyes of the IRS. And your employer would be providing some benefits, right? The employer might be saying, hey, I'm going to give you health insurance. I'm going to match your 401k contributions. You're going to get some PTO, right? You're going to get some other benefits, maybe some group life insurance rates or something like that, okay? And another thing to keep in consideration is the taxes that you pay is going to change considerably if the household income starts to approach $325,000, okay? So if you're kind of watching this video and you're maybe a physician and you make way more than $120,000, or you have a specialized field where you earn way more than $120,000 and your household income is going to be $325,000, the tax that you pay is going to go up dramatically. Obviously, you're making more income tax, but another thing that's going to be affected here is the what's called the qualified business income deduction. You might hear that referred to as Section 199A. That additional deduction goes away when you are earning this amount of money. All right, so something to kind of consider. All right, so what's the conclusion here? Well, if you're making about $120,000 as an employee and you're going to switch to an independent contractor, in my opinion, you're going to want to ask for a little bit more money. I would say you should be asking for at least $25,000 to offset the additional headache of the tax preparation, payroll service, all that stuff, hiring someone to do that for you, right? Maybe if I'm doing that for you, I might charge you a few $1,000s a year to kind of facilitate all your bookkeeping and all that. Also help offset the medical insurance that you might have to pay, as well as the no 401k match, right? So I would say, ask for at least $25,000 more. Maybe you want to ask for more, like $40,000 more. Again, every situation is different. The idea here is it's more expensive to operate as a sole proprietor, right? So ask for more money. And I would say at a minimum, ask for $20,000 more because, that's the benefits that you're not getting that you're going to have to pay for out of pocket. It's about what it's going to equate to. Now, everyone's situation is different here, right? So don't watch this video and just, apply this to your scenario. You should probably get a consult, maybe not from me, maybe with someone else, another trusted advisor, kind of go through this math or scenario with you and make sense of it. All right. So if you learned something in watching this video, hey, please consider in subscribing, maybe like this video, share it with one of your IT folks that are wondering about this scenario, or someone who's going to go the independent contractor route, needs to compare this scenario. Share this video with them so that they can make an educated decision. All right. For more resources, more free videos, go to my website. It's navimuradcpa.com. On my website, you'll be able to form your LLC for free, get an S corporation done for free, watch all my videos for free, give away a bunch of resources there. All right. With that said, thanks for watching, and I'll see you in the next video.